Hello students, welcome back to GK's education. As you all know, very important chapter share capital is going on and we did reissue of forfeited shares in the previous video. In this video, we are going to do some more practical examples so as to make the concept clear in depth. Firstly, I would like to request please do like and subscribe my channel so that you can understand your concepts in depth. Now, come back to the topic. We are going to do the examples on reissue of forfeited shares. So, here is example number 1. Moonlight Company Limited offered 10,000 shares of rupees 10 each at 11 per share. That means the issue was made on premium. Rupees 3 on is payable on application, rupees 4 on allotment, rupees 4 on first and final call. Now applications were received for 12,000 shares. That means issue was oversubscribed as the company offered 10,000 shares but the application were received for 12,000 shares and pro rata allotment was made. An applicant for 120 shares could not pay the allotment and call money, and Mr. B, an applicant for 120 shares could not pay the allotment and call money, and Mr. B, a holder of 200 shares, failed to pay the call money. All these shares were forfeited. Now, out of these forfeited shares, 150 shares, whole of A's share is included. That means 120 shares of A are completely included in it, were issued at rupees 8 per shares. Now, record all the entries. So, first we'll do one working note. Here, shares applied were 12,000, shares allotted were 10,000. So, money received was 12,000 into 3, 36,000, and money required was 10,000 into 3, that is 30,000. Excess money was 36,000 minus 36,000, and it is adjusted in allotment. Now, let us back to the entries. First entry is bank account debit to share application as application money received for 12,000 shares at the rate of rupees 3 per share, 36,000. Now, share application account debit 36,000 to share capital 10,000 into 3, that means 30,000, and to share allotment the excess money adjusted, that is 6,000. Now, share allotment account debit. Here the share allotment actually becomes due. Here the share allotment account debit 40,000 to share capital 30,000 to securities premium reserve account 10,000 into 1, that is 10,000 rupees. Here rupees 4 in allotment was due, out of which 3 is share money and rupee 1 is premium. So this entry will be here for becoming the allotment due. And now the actual money received on allotment, how we will calculate. Let us see this note here. First thing, an applicant of 120 shares could not pay allotment and call money. Allotment money is not paid by A for 120 shares. And here A is an applicant, means he applied for 120 shares. How many did he get? We have to find out. Now let us find applied for if applied for 12,000 shares, we get 10,000. If applied for one share, we get 10,000 divided by 12,000. And if A applied for 120 shares, how many did he get? 10,000 divided by 12,000 into 120. So it comes 100 shares. That means he got 100 shares. Now let us find how much excess money was adjusted. Shares applied 120 and shares allotted 100. So money received was 120 into 3, that is 360, and money required was 100 into 3, that is 300. So excess money was 60 rupees and money adjusted in allotment was rupees 60. So this was the thing. Now by A, how much money did not pay for allotment? Money due by A towards allotment was rupees 100 for 100 shares into rupees 4 due on allotment. It was 100 into 4, that is 400, and money already paid or adjusted was rupees 60. So in nutshell, he did not pay 400 minus rupees 60, that is 340 rupees were not paid by A for allotment. Now let us find the amount due on allotment. Total amount due on allotment was 40,000, out of which money adjusted is 360 rupees. If all sorry, the money adjusted was 6,000 that we have calculated for for allotment. So 34,000 were left, out of which not paid by A 340. That means 33,660 was the actual money received. So here comes the allotment money. Bank account debit to share allotment 33,360 rupees. Now after allotment, first and final call was due of rupees 4. So how we will do? Share first and final call account debit to share capital 10,000 shares, rupees 4 per share, that is 40,000, being the money due on call at the rate of rupees 4 per share on 10,000 shares. Now money received was bank account debit to share first and final call account. Now from out of 10,000 shares, money for the money was not paid for 100 shares by A, and for again a defaulter was there. B, a holder of 200 shares, failed to pay the call money. So for 200 shares again the money was not received. So 200 shares minus 100 shares, out of 10,000 we subtract 300. For 9,700 shares we received the money. So 9,700 into 4, it comes out to be 38,200 rupees. And now how the things will do, all these shares were forfeited. Now we have to forfeit the shares. That means 300 shares were forfeited. So forfeiture entry will be share capital account debit 300 into 10. That means all the called up money 300 into 10, 3,000. Now securities premium reserve account. Here we will debit the securities premium reserve account, as we did not receive the money of premium on 100 shares of A, and as allotment money was including the premiums and he did not pay for 100 shares the premium, so we have to debit the account. Securities premium reserve account debit 100 into 1, that is 100 rupees. To share allotment we calculated that he did not pay the money, rupees 350 were not paid by A for 340 were not paid by A, we calculated earlier. To share first and final call for 300 shares, first and final call we did not receive, so 300 into 4, that is 1200. And now the balancing figure will be transferred to share for which account, 3100 minus 340 minus 1200, the balancing figure 1560 is transferred to forfeiture account, or we can say the amount which we have already paid on the forfeited shares. You calculate it in another way also. The amount already paid on the forfeited shares will be transferred to share forfeiture account. Now bank account debit. How? As these forfeited shares were reissued at rupees 8 per share. So bank account debit, out of these only 150 shares were transferred. Out of these only 150 shares were reissued. So bank account debit 150 into 8, 1200. To share capital 150 into 10, that means 1500, and the difference between both of them will be transferred to share forfeited account. Now the profit, how we will calculate, let us check. For 100 shares the amount transferred to forfeited account, as A's share is completely included. A's share is completely included, and 30 shares out of B's share are taken. So let us calculate. For 100 shares the amount transferred to forfeiture account is 360 rupees. How we calculated it? Yes, let us check. For For 100 shares, the amount transferred to forfeiture account is 360. For 200 shares, the amount transferred to forfeiture account is 1200 rupees. For 200 shares of B, the amount transferred to forfeiture account is 1200. For one share, the amount will be 1200 divided by 200, and for 50 shares, the amount will be rupees 300. So 360 of 100 shares plus 300 of 50 shares, total amount comes out to be 660, out of which the amount debited on the reissue is rupees 300, this one amount. So subtract it, and the balance of rupees 360 will be transferred to capital reserve account. So here the entry will be share forfeiture account debit 360 to capital reserve 360, being the profit on the reissue of 150 shares transferred to capital reserve account. So this is how these questions are done. So this was the first example of making clear the reissue of shares. Now let us take one more example, a bit typical one, to make our understanding much more clear. Here, delimited invite applications for 30,000 shares payable at rupees 10 each at the premium of rupees 4 per share. Now the money is payable as with application including premium of rupee 1, rupees 3. On allotment, again premium is included, rupee 4. Now, on first call, including the premium, rupees 4. On second and final call, again including the premium as 1, 2, 3. Rupees 3 are done, and 4 rupees is total premium. So again, here the premium of rupee 1 is included, rupees 3. Now let us calculate the total money. Here in rupees 3 is 2 plus 1, rupees 4, 3 plus 1, rupees 4, 3 plus 1, rupees 3, 2 plus 1. So 3 plus 2, 5, plus 3, 8, plus 2, 10. And 1, 2, 3, 4, that is 4 rupees of premium. Now, applications were received for 45,000. We offered 30,000 shares, but applications were received for 45,000 shares. 20% of the applications received were rejected, and the application money was refunded, and the remaining applicants were allotted on pro rata basis. S, who applied for 600 shares, failed to pay the allotment money, and his shares were forfeited immediately after that. M, to whom 750 shares were allotted, failed to pay the first call, and his shares were forfeited. The forfeited shares of S, here S, were reissued to L for rupees 8 per share as fully paid up, and the final call was made due on the remaining applicants and was received except on 1000 shares of A, and these shares were forfeited. Of the forfeited shares, 1500 shares were issued to Devika for rupees 12 per share as fully paid up, the whole share of L being included. Now record all the entries. Now let us check how we will calculate the question. The first entry will be bank account debit to equity share application account, being the application money received on 45,000 shares at rupees 3 per share. So 45,000 into 3, that is 1,35,000. Now the adjustment comes here. Let us find how the adjustment will be done. First, total application received was for 45,000 shares, out of which 20% rejected. That means 45,000 ka 20% of 45,000 means 9,000. So the applicants were there for 45,000 minus 9,000, that is only 36,000 shares were issued. Uh, 36,000 applicants were there. For 36,000 shares applied, they were issued 30,000 shares. So the money returned was 9,000 into rupees 3. For 9,000 shares, they returned the money, that is 27,000. And now how the entry will occur, let us check. And then shares applied were 36,000 and shares allotted were 30,000. So money received actually for 36,000 shares was 1,08,000. But money, how 1,08,000? 36,000 into 3. And money required was 30,000 into 3, that is 90,000. So the excess money was 1,08,000 minus 90, 18,000. So 18,000 were adjusted in allotment. Now let us check the entry. This entry of money received was done. Now adjustment entry. Equity share application account debit with the whole amount 1,35,000 to equity share capital. For capital 30,000 shares into rupees 2 per share, as it is including the application money is including the premium of rupee 1. So equity share capital into 30,000 into 2, that is 60,000. Then securities premium reserve account 30,000 into 1, that is 30,000. And equity share allotment, we calculated that allotment money or adjustment of 18,000, so it comes out to be there. And to bank final for 9,000 shares, rupees 3 per share were returned, 27,000. So debit comes equal to credit. And now then equity share allotment account debit. Here the allotment money becomes due. Equity share allotment account debit to equity share capital. For allotment money rupees 4, that means rupees 3 plus 1. So to equity share capital account 30,000 into 3, that is 90,000. To securities premium 30,000 into 1, that is 30,000. So allotment money due is 1,20,000. Now how the allotment money received we calculated, which we have to, for which we have to see this note. Now allotment money due was 1,20,000, out of which we already adjusted 18,000, the money adjusted towards the allotment while we got the money in application. So 1,02,000 was left. Now amount not paid by A was 1,700. How we calculated it? Let us check. Yes, the amount paid here we see S who applied for 600 shares. Who applied for how many did he get? We have to calculate 600 shares. He failed to pay the allotment money and his shares were forfeited immediately after that. Means after the allotment call was done, his shares were forfeited. So he applied. We have to find how much did he get. Here we will make the calculation. If applied for 36,000, then allotted 30,000. If applied for 1, then allotted 30,000 divided by 36. And if applied for 600, then how many he was allotted? S was allotted 30,000 divided by 36,000 into 600. So A was allotted 500 shares. He did not pay allotment money 500 into 4, that is 2,000 rupees. But how much money was adjusted? Extra money was adjusted. Let us find out. Here he allotted for 100 shares. For 100 shares at the rate of rupees 3 were adjusted already. So 2,000 for 100 shares extra money, rupees 3, that is 300. So 2,000 minus 300, 1,700 were not paid by S. So this 1,700 was subtracted from 1,20,000 minus already money paid minus 1,700 not paid by A. So a total amount received for the allotment was 1,300. 1,300 rupees only. Now here come back to the entries. Bank account debit to equity share allotment 1,300. Now again these shares were forfeited. So equity share capital account debit, securities premium reserve, as he did not pay the premium, so securities premium reserve account 500 shares into 1, that is 500 rupees will be here. Now how much money we took here as 500 by allotment? The share call money paid was up to the allotment. The share call money was 3 plus 2, that is 5 rupees, and 2 of premium was there, out of which he did not pay only 1. So only premium reserve account is debited with 1 rupee, and called up money was rupees 5 up to that moment. So 500 into 5, that is 20. 500 rupees were taken. Now to equity share allotment account, for allotment we calculated he did not pay 1700 rupees, we calculated earlier. And to share forfeiture account, the money paid, that is 2500 plus 500 becomes 3000 minus 1700, so remaining is 1300 left to the share forfeiture account. Then equity share first call money due, equity share first call account debit to share capital to securities premium reserve account. 30,000 shares were there, out of which 500 were forfeited, so 29,500 were there. So 29,500 first call was made. 29,500 into 3, 88,500 will be credited to share capital account, and securities premium reserve account 29,500. Then now we will do bank account debit to equity share first call. How they receive the money, we will calculate. Amount due on first call was 1,18,000, but M did not pay for 750 shares, as here the point was there. M, to whom 750 shares were allotted, failed to pay first call and his shares were forfeited. So first call was 750 shares. First call 750, as the amount due was 1,18,000. M did not pay for 750 shares, so 750 into 3, 2250. So the total amount subtracted from 1,15,750. So this entry will be here. Here we will see it. Bank account debit to equity share first and final first call 1,15,750. Now these shares, that means 750 shares, again they will be forfeited. So entry will be equity share capital account debit for 750 shares up with 8 rupees. How 8 rupees? Because up to the first call the money was 2 plus 5, the word 3 plus 2 5, 5 plus 3 8, the money was 8 rupees called up. So here we will we can say we will debit them with rupees 8. So 750 into 8, that means 6,000, and securities premium rupee 1 was not paid by them, so 750 into 1, 750. Now equity share first call, how much money? 750 into 4. 4 means the money not paid by the person. 750 into 4, 3,000 rupees, and the balance of difference between 750 and 3,000, that is will be transferred to share forfeiture, that means 3,750 rupees. Now these shares were also minus. Next, the bank account debit. Here he says, here the question says that the forfeited shares of S were reissued to L at rupees 8 per share. S were 500 shares were there, so they were issued to L for rupees 8 per share. So now 500 shares, bank account debit 500 shares into 8, that is 4,000, to equity share capital 5,000. So difference transferred to share forfeiture account 1,000. Then share forfeiture account debit to capital reserve. Here when the shares were forfeited, they transferred, yes, when the shares were forfeited, or these previous shares were when forfeited, the at the forfeiture the entry will be 1,300 were transferred to share forfeiture account, out of which while the reissue of shares we issued 1,000. So 1,000, 1,300 minus 1,000, rupees 300 will be transferred to capital reserve account. Now share second and final call. Sure, second and final call of rupees 3 was due. So how it is done? Equity share second and final call account debit to equity share capital to securities premium 30,000 minus 500 minus 750. So the amount was 28,250 shares were left. So securities premium rupee 1 per share, and the total amount out of 3 rupees 2 is the call money and rupee 1 is premium. So for 28,250 shares into 2, 56,500. Now bank account debit to equity share final call account 84,750. So second and final call, we did not receive for 1,000 shares. Except for 1,000 shares, the call money was not received. So 28,250 minus 1,000, that comes out to be 27,250. Upon them, rupees 3 per share. The total amount received was for second call 81,750. And now these 1,000 shares were forfeited. Equity share capital account debit 1,000 into 10, 10,000. Securities premium reserve account 1,000 into 1 as premium was not received 1,000. To equity share second and final call for 1,000 shares rupees 3 were not received. So 3,000, and the balance will be transferred to share forfeiture account 8,000. And now bank account debit, or as per the question, these shares out of the 1,000 these shares and 750 these. So out of these 750 shares, 1,500 shares were reissued. So reissue entry, bank account debit to equity share capital 1,500 into 10, that is 15,000, to securities premium as these were reissued at rupees 12 per share. So to securities premium 1,500 into 2, that is 3,000. So add both of them, 18,000 is debited to bank account. Now share forfeiture account debit to capital reserve. How the money is transferred, let us check. Share forfeiture for 1,000 shares 8,000, we transferred 8,000 to forfeiture account while transferring, and for 750 shares we transferred 3,750 when we can say when we forfeited these 750 shares. So in this forfeiture entry, when we forfeited 750 shares, we transferred 3750 rupees. So for 750 shares, 3750 rupees. For one share, 3750 divided by 750. For 500 shares, 2500 was there. So the total amount of 8,000 plus 2500, 10,500 were transferred to share forfeiture account. But while reissue, we did not use any money. So to all this part of share forfeiture, that means 10,500 will be transferred to capital reserve account. So it was the profit on the reissue of the reissue of shares. So this was all done this regarding this problem. I hope now this concept is very much clear to you. So please keep learning. Watch this video again and again to make your concept clear, or you can reverse the video to clear the concept, and keep learning, keep going. All the best. Please do not forget to like and subscribe my channel. All the best. Bye bye.